Welcome back. Let's talk a little bit about the current developments and markets. क्या लगता है? So before today, I'm going to be talking about Bank Nifty and Nifty. And before we talk about it, very quickly, the risk disclosures. Investing is risky. We are going to talk about the market overall high level analysis, ideas, opinions, but please do not use this directly to trade only if it is in your plan. You need to have your own trading plan, and you need to be following that. Financial success depends on various factors, internal and external. I do not take any responsibility for anything towards your financial success. If you have been following me, you would have seen this all the while. These are my very long term Elliott wave counts. So we had 2007 first wave, then we had a correction, second wave, and then we have started the third wave. Within that third wave, we have got a one in blue, two which finished after COVID, and then we've started third. So that was third of third, which was the major move beyond the COVID. So that was that. And then within that, let me quickly get to a little lower time frame. And if you look at within that particular move, this is what we are expecting to happen, or which we believe is happening. You had a one, look at the black one. We had a one, we had a two, we had a three, which finished 2021. After that, we had a four, and then we were in fifth. Within that fifth, we have got a one, a two, and then we are in this three, and then we would have a four, and then we would go five. And within that, the last wave that we are discussing, which started March of 2023, which is in black here: one, two, a three, a four, and a five. So the question or the discussion that we are going to be having today is whether this four is over and whether we have started five. In the last recording that I did some time back, I think it was when was it? I think it was on 22nd March. I had said that most likely we would have finished it, but post that we have had the Trump candle, the Trump sell off, and because of which I'm doing this follow on session. So let's look at the next level of detail to evaluate. So now we are on weekly, and this from 24th of March until 7th of April, these 3 weeks of fall is what we are quickly going to discuss about it. So before that, I was able to see a very nice A, B, C. Within that C, I was able to see 1, 2, 3, 4, 5, and all that. We have talked about it in 22nd of March, and then I had a reason to believe that we finished everything, and then markets had started moving up. Although at that point in time, I did mention a level of 21,700 odd levels, which was actually 1.6, sorry, 0.6 times of this wave 3. And if you look at the Trump sell-off, it has actually hit those same levels. I was expecting that from here it would correct a little bit and then go up. Instead of correcting a little bit and going up, it actually broke the previous low. Now that made me scratch my heads whether we have completed the correction or we are in the correction still. And I'm keeping these old lines just to refer to you what I expected to happen earlier on 22nd of March. Now, if not if 100%, when this got broken up, those counts are falsified, and this happens a lot of times when you are trying to talk about the correction over or not. The typical corrections are ABC corrections, but then corrections can get very complex very fast, because you may have a double twos, double threes. A double two is basically combination of two corrections, which is ABC, and then there is an X and then another ABC. Or double threes, you could have ABC X, ABC Y, again ABC. So it could actually get very complex, and that's where probably we are at. Now forget about the corrections and just look at the size of the correction. By size of the correction, we have completed 0.61%, and if we would have completed that, then we probably have started a wave 5, as you see in this black line. And now if that is the case, this particular move, the wave 5 move, will need also to be doing in some sort of order, right? And let's say we have here, this is a wave 1, and there is reason to believe that it would be a wave 1, and then we would correct about 50-60% of that. Then we have a strong wave 3, which will go sideways correction, and then a wave 5. So this is very much a possibility. Okay. And now what would we what would tell us whether this possibility is happening, or we are going into another deeper correction, and this is an X, and then ABC correction would follow, and more correction and more sideways move, and more painful things may happen for the markets. So if you want to look at that, let's go a little bit on the daily time frame. Now in this daily time frame, if you look at it, and this is a typical thing that a lot of traders look at, are gaps. If you look at it, you had one gap here, you had second gap here, you had a third gap here, at least three gaps, and this particular gap was closed against another gap. Markets do not like gaps. Why they don't like gaps is because it does not allow all the market participants to contribute in the market. It doesn't allow you to get into the market and then trade in the market, and then you've lost the opportunity, right, to buy at those levels and to sell at those levels. So markets are very curious, and they want to see what is opposite side of the gap. So in my opinion, even if this is a wave 1, a wave 2 is going to at least take away this gap, and probably this move have started, and this was probably because of the 7 consecutive up bars. So that's called one time framing. After one time framing, you have a market which is very heavy, and then markets need to correct, and that is what probably has happened. I do not believe that markets will continue to go up. We are not in the wave 3. Yes, we are on wave third of fifth, but we are not on the third of third, where markets can keep on moving in one single direction. Either we are on fifth waves are usually sluggish waves. This is fifth of third, so it will show little bit of aggression, but again it will not be as aggressive as the post covid move that we've seen. Post covid move, when we went up in single direction. So let me just quickly take you there. This is 23. I think this is the one. So this was the post. I'm so sorry. Little more. Yeah. So this was the post COVID move, and you would see a gap here as well. Now this gap is called a runaway gap. You may be able to have these kind of gaps here because they are wave 3 gaps, and you may have runaway gaps in wave 3, and markets here at this point in time, actually there was only one daily bar which was, or two daily bars which were little negative, but then most of the bars just kept on going up. the lower lows were not broken. But this may not be the case now. Now the situation is different. You are in a little different kind of market. You are on wave fifth. So I would expect the markets to go little bit less aggressive than what we have seen in the last 3 4 days. Last 3 4 days were probably driven by greed and oversold markets, which happened after the Trump sell-off, and they will have to come into little bit of sanity. After this, you are going to start third of fifth of third of third of third, and you may actually see little bit of aggression after this correction is over. But then this is going to be much more smoother compared to the 2020 wave third. So just keep that in mind. What I do expect a small correction, which will take us from 24,300 levels to around 22,900 levels. Beyond that, this is going to close this gap. Beyond that, we will have to see whether the markets want to correct further, want to go sideways, or want to go up. So if you find markets going up from there, and if you see in Dow theory higher high higher lows, then you should become a buyer in this market, and then expect the levels of what is this levels of 27,700, which will be 1.27 times the previous fall. Okay, I'm sorry, I did not do this correctly. Okay, so this would be 27,500. So 27,500 you could expect from here, and this would be fairly a nice rally to make money going long. Let's see what happens with the bank nifty next. Now here we are on the bank nifty, and if you let's start from the COVID times. It is similar to what we have seen in nifty, and you would see in blue lines 1 2 then 3 then 4 and then 5, and you would also be able to appreciate the slope of wave 3 here compared to wave 5 slope. So in this wave 5, there's a little bit of a difference here than what I had talked about it some time back earlier. In the red, we have got 1 2 3. This is a 3 3 was not as long as 5, and then 4 and 5th. In this particular case, the fifth wave is an elongated wave, and the fifth wave I am able to plot it as 1 2 3 4 5 again in red. This probably would be better off drawn with black just to get the different colors. And in this particular fifth wave, we need to look at if the fifth wave is over or not. Now with nifty, we had to look at the fourth wave, which was little complicated, but counting an impulse is much more easy compared to counting a correction. So that is a good part about bank nifty. So let's look at this, and beyond that there is going to be a sideways move, which nifty is rightfully in, and we have to see how it is going to be for the bank nifty. So you had this 7th of March, and then beyond this you have if you look at this is a wave 3, very clear wave 3. You've got some gaps, and you have an aggression of the wave 3. This should be up there. Let's not worry about it right now. And then if I have to plot, I would be plotting 1, and then a deep correction to either 3 is over or yet to be over. Let's look at it a little later, and then a 5. And this 5 is going to, let's say, correct somewhere here. Let's worry about that a little later. And if now this is a blue color and smaller, if this is what we are going to be seeing, we should be able to count this wave 3 correctly. For that we will need to go a little bit details, and here we are able to very nicely count again 1 2 3, and this is a 1, this is a 2, this is a 3. We are in the fourth wave. Let's assume that the fourth wave will go little further, and then we will finish the fifth wave. Okay, and let me put this in red. So this is what I am going to be expecting in Bank Nifty. So you would say, where will this correction end? Here I don't see a clear ABC. I am left with Fibonacci here. So if I plot Fibonacci, and if I look at Fibonacci, most of the times wave 4 would be 0.38, 0.5 or 0.61. So these are the levels. So the shortest correction would be somewhere here, and then we might go up again, which will be 1.27 levels of wave 4, which will probably take us somewhere 57,200 odd levels, and then another correction is going to be there. So from these levels, if you are an option seller, you are in a good period for at least few more days, if not weeks, uh, for where we will have a sideways move in Bank Nifty. I'm sorry. So it should be at least this much, and then the next up move will be there. So that is what I have in mind for you. But again, as I told in the disclaimer, I'm not a god. I don't see the future. I can only see the past and try to extrapolate things onto the future, and things may change. What you need to be following is your own trading plan, and make money. So simple. Best of luck. Cheers. Bye.